let us get to it, ne? Trevor Gumbi level, this one. It's a Trevor Gumbi level. Some that are new, welcome, ne? New people, welcome. I've already recorded part 1. It's gonna be shared to you guys via YouTube, right? We have a YouTube channel. I hope you guys are subscribed. If not, please subscribe so that you can be informed when we release videos and whatnot. But let's get back to the work and, of course, jokes. So we spoke about comparability and verifiability. Now we need to talk about what? Timeliness, right? So when preparing financial statements, something that is enhancing is timeliness, right? This is referring to having information on time, né, to consumers or investors to make a financial decision. It also talks about relevance to some extent, right? As to like when is this information prepared, how long is it, and the rate at which it is provided to a potential investor. Timeliness. How quick is the information accessible to a decision maker to make a decision to invest in that specific company? Are you guys getting my point there? Right? So how available is the information for a person to make a decision, right? That is enhancing qualitative characteristics. Those that don't know enhancing and qualitative, maybe for those that are new, right? Fundamental qualitative characteristics, right? These are your non-negotiables, right? So if you're looking for a partner, guys, right, this is non-negotiable. Your partner needs to have money. Ne? This is not my personal opinion. This is what you guys think, right? Your partner, my needs to have money. Please, no mistake. Ne? They need to have this certain height. They need to have this. They need to have that. That is fundamental, right? I will show the slides I'm reading from. Am I not showing them? So it's these ones basically. But this is just a recap of the last call, right? So there's no need for me to share them now, but I'll share them when I'm going through them. So fundamental, that is what we're talking about. We're talking about non-negotiable. These are things that have to be in the financial statements, right? And then it's relevance and faithful representation. Qualitative, right, or enhancing qualitative rather, is things that just make it better. So this is a green flag. It's a bonus. You understand? And we already spoke about comparability. We already spoke about timeliness. We already spoke about verifiability. Now we're gonna add the last one, which is understandability. Why do you guys think that understandability is important when making financial statements? Why? Like, why must a person understand what they are reading? Like, what do you guys think based on that? You guys are more than welcome to unmute yourselves, raise your hand, chat in the chat box. Like, why must a person understand? Yes, there's a hand, Tefu. Or is it? Yes, it's Tefu. Batseba, ne?
Yeah, I was saying, may I please try to answer that?
Yes, you're more than
Like, I
welcome.
feel like you need to make the financial report, or is it report?
Financial statements, financial reports,
Oh,
yes.
oh,
Either
yeah,
or is fine,
financial
yes.
statements
Mm-hmm.
to be understandable, because I get there are different users. So, like, you can't compare. You need to make it understandable, because the users, like, they have different levels of understanding. So, for example, you can compare a user that is a potential investor to have the same understanding as a consumer. So yeah, that's what I think.
Good. You are cooking. You are cooking. Therefore, you are peg. You are peg. Right? Absolutely spot
Driver,
on.
please repeat the question.
So the question I have, which I'm looking for another answer, is why do you think financial statements need to, when prepared, they need to be understood by the users? Like, why should they be
So that they
understood?
know,
Yes.
so that they know the financial decisions that they're gonna make.
Manje clean. And when are you joining now, Malamba? And you're ready to you're getting 100 most. Exactly, guys. People need to know
Yeah.
what they're getting themselves into. You understand? The financial statements, though, there's no need in. But again, there's no need in. Ish. Now even my English bundles are finishing. You can see the time, ne, guys. There's no reason, rather, ne, for financial statements to have is Greek lapo here and there. and have Latin terms like ceteris paribus or whatnot, because the layman's person, right? A normal person from Soshanguve or Itembisa or Kwamashu, for example, or Venda or Limpopo, you know, they won't understand all of this. The average person, right, is illiterate, unfortunately, right? The average person. So we need to make sure that when we prepare the financial statements, they are prepared in a manner that even the magogo who sells scones is be like, no, yazi, I read that document mntanam, I know, sheba yakhuluma labantu, yeah, no, nami ngifuna ufake pension yami. You understand? Like, it must be that simple for umagogo to be like, no, when you don't know, this one is the one, this one is the future. That's enhancing because people understand what they're getting themselves into. Are you guys following though? Because if people don't understand the financial statements, how can they possibly make decisions? How? It's like, how do I say it? Ash, I don't want to make too many personal jokes, you understand? But like, how? Guys, come on. You need to understand what you're doing. You understand? Otherwise, how? I'll understand. Just like how I'm saying you understand. If you don't understand, you can't make a decision. You understand? Okay, now I'm saying I understand too much, but you get my point. Right, guys? You need to know what you're getting yourselves into. The financial statements need to be understood for people to make decisions. Right? Good. I hope that it runs well, and if you guys have a question, you're more than welcome to ask. Important elements. Elements, right? Important. We have 5 elements, guys, in accounting. University level, you need to know the definition of all of them. So all of this that is written down, it is vital for you to know this. We have 5 elements, right? They are as follows. The reason why I like going back to my thing is to see everyone here and not you guys just to read the things, because the slides will be shared. We have an asset, right? We have a liability. We have equity, we have income, and we have expenses. Can you guys all write these down? We have 5 elements. Income, right? Expenses, assets, liabilities, and equities. Write all of this down. It is important. For those maybe that wanted to join in the class for semester test 1 content, type in the group those that can. Okay guys, he's covering what's going to be tested in semester test 1. This one is important. I promise you guys, this one is going to count 15 to 20%. So if you know someone who's doing accounting, just text in the group chat, okay guys, now it's serious work. He's covering what's going to be tested. How do I know this? I've done this module multiple times, guys. I've been in the game. Ne? How does Maporisa say it? That's how I learned the game. So I've learned the game. I know there's something Sowetos of the world. So in this paper that you're gonna write in March, I'm telling you, the elements are gonna come out. I'm telling you for free. Please write these down. So I'll show you the screen, ne? But write this down. Definition of an asset. An asset is a present economic resource, right? Controlled by the entity as a result of a past event. Are you guys following? An asset is a present economic resource controlled by the entity as a result of past events. Did everyone get that? To basically summarize that, can you guys see that it's present economic resource controlled? We can use acronyms, right? And create our own word called a perk. So those that grew up in the lavish neighborhoods, you guys know perks, right? Because you guys take them. Unfortunately, I'm joking. It's a joke. But your little Uzis, your rappers, they make reference to perks. These are drugs that cool you down. In the test, I want you to remember this. An asset is a perk. It's that drug that, oh yes, yeah, it's cooling me down. It's a present economic resource controlled by the entity as a result of a past event. Can you guys see how we are simplifying content, guys? Learning must be fun, guys. If it ever feels like a lecture, just know that it's time for me to retire. I'm no longer fit for the game. Do you understand? I'm I'm no longer fit for the game. If you guys don't get it, ask. You will get it. BCom in lecture in comedy. It's different, right? But let's stick to the topic. And then we need to go as far as explaining an economic resource now, right? What is an economic resource? What is an economic resource? Ne? Let's go back. An economic resource is the right that has the potential to produce economic benefits. What is meant by this? Also write this down. An economic benefit is the right to produce, right? An economic resource, rather, is the right to produce, or is the right that has the potential, rather, to produce economic benefits. Why is this? So, let us assume that you are in the ice cream manufacturing business, right? And you buy an ice cream machine. Is it because that you bought an ice cream machine? Is it a God-given right that customers must buy ice cream from you guys? Is it? By virtue of you buying an ice cream, is it a God-given right that no, people must buy ice cream for me, otherwise they'll suffer? No, it's not a God-given right. You understand? Right now you're still assessing the game. You are buying the machine in winter. You understand? It's not a God-given right. Mara, you buying that machine and you are in the industry of making ice creams. It has the right to produce potential. You understand? It's potential because it's not given. It's not God-given. It's the potential to produce economic benefits. And the economic benefits in this context would be people buying from you. You understand? When they buy with what? Money. That's an economic benefit because you are getting machangura. Are you guys following? So that's the definition. A present economic resource controlled by the entity as a result of a past event. Right? What is the economic resource? There's something that has the right to produce, the potential to produce economic benefits. Alright. Is everyone okay with that, guys? That is important. Test 1, it'll be there. Right? Liability. Liability is a present obligation to transfer economic resources as a result of past events. Are you guys following? Right? A present obligation to transfer economic resource as a result of past events. So you are obliged to transfer. You understand? You are obliged. Hauna choice. You don't have a choice to transfer economic resources. Usually this is money, right? You are obliged. You don't have a choice. This is not you borrowing money from your friend and then you never speak to them again. Here a contract is signed. So technically, you have no legal possible way of avoiding this contract. Hence why you are obliged. It says an obligation is a duty or responsibility that the entity has no practical ability to avoid. With your friend, you can be like, hey Joe, where's my money? Oh, hey, the best one is, hey Joe, where's my car? And then you're like, and then the friend you borrowed the car is like, yo, your car, hey Joe, I'm in a taxi, I'm coming to you now, I'll explain. And then when you're like, hey man, I gave you my car, but when you're in a taxi coming to explain, I hope you're with my taxi. Like, I hope you're with my car where you at, because, hey dog, me, I don't want stories. In that guy, like there, guys, there's no liability, because you gave your friend the car. There was no signing of anything. Maybe the friendship is ruined. But at the moment the friend says, hey dog, hey, something happened, you see your car, I'll explain, like I'm in a taxi, I'm coming. Just know the car's cold, gents. It's cold. It's cold. It's not coming back. However, with entity to entity now in business, contracts are signed. So you can't just wake up and be like, hey my boy, me, I can't pay you. Because they're gonna use the contract that which was signed, which had consensus and legal possibility and a physical possibility and consensus and legality. They're gonna use all of those requirements to be like, hey Baba, if you don't pay us here, us we're gonna take you to the dry cleaners. Have you ever heard that term used before? We take you to the dry cleaners. It means here they're gonna wash you, Baba. They're gonna take you for everything. They're gonna put you in that machine. It's chai. They're coming for you, right? So that is the definition of a liability. Is everyone okay so far with income? I mean, with asset and liability.
So one more time, please just repeat it.
So
I just
liability or asset, which one, brother? Which one must I explain, my brother? Liability or asset?
liability.
So a
Li-
liability, okay, a liability.
liability.
Yes, I heard you. A liability is it's a present obligation to transfer economic resources as a result of past events, right? And then, what
Yeah,
is
yeah,
an
yeah.
obligation? We come here again. An obligation is a duty or responsibility that the entity has no practical ability to avoid. You can't run away from this. You understand? Like, you can't just wake up and be like, "Man, I don't have money, my brother." You can't. There's no such a thing. It's business here. If you don't have money, you somewhere you'll formulate it, but something must give. So you can't avoid it. But when you give money to your friend, there's nothing you can do to that friend. You can try panel beat him. Now we'll just take you to the cops and have you arrested now because he wins boy. Like, what are you doing? You understand? So is everyone okay with that? Good shot. So now let us move on. So now we're going to the definition of equity. Equity here it says that it's the residual interest in the assets of an entity after deduction of all its liabilities. Simply put, what they mean is that equity is assets minus our liability. That's important also for you guys to note. Our equity is our assets minus liability. That's how you can know that, right? What is it said in the textbook? It says that it's the residual interest in the assets of the entity after deduction. What they're basically saying here is that assets minus liabilities gives you equity. Then we come to income. Income is an increase in assets or a decrease in liabilities that result in an increase in equity other than those relating to contribution from holders of equity claims. Are you guys following? Income is the increase in assets because usually maybe there's money put in our bank account and bank is an asset, so it's increasing, or a decrease in liability, right? So in this context, maybe um what is it, a decrease in liabilities, I don't know, maybe we owed something but we overpaid it, so we're decreasing our liability, and that results in an increase in equity because when money comes into our business, our equity overall increases. And when they say other than those contribution from holders of equity claims, they are referring to dividends, right, and capital distribution and whatnot. I saw a hand. Is there a hand? There's no hand, ne? So I was seeing things. Okay. No, guys, you guys are supposed to say no. There is a hand. You're not seeing things, my brother. Because now I feel paranoid. I'm like, how? Here I'm tutoring, and I'm seeing ghosts. Right? So there's no question, eh? Everyone is fine. Good. And then the definition of expenses is the opposite. This is a decrease in assets, because usually maybe money comes out because it's an expense, or an increase in liabilities that result in a decrease in equity other than those relating to the distribution to holders of equity claims. So expenses decrease our assets maybe if you're paying, right? And then it results in a decrease in equity because you have less money. When you have less money, your equity decreases, right, guys? Equity decreases. There's someone who's raising their hand. I'm not sure if it's a raised hand or what. Is there someone who'd like to join or something? What's happening? Is there anyone with a question, guys, or am I moving too fast for your liking? What's happening? Is everyone fine? Just give me a thumbs up if you're all good. Okay, fine, right? Then we move. Additional useful self-study things to know. Stewardship. What do you guys think stewardship is? Stewardship. This is usually maybe for accounting 2A. It won't be necessarily tested for accounting 1A, but if you guys know it, then it's good. It gives you a background, or it gives you a good foundation. What do you think stewardship is? Or what do you think it refers to, rather? Stewardship.
So it refers to basically like managing something.
Exactly. Managing something. So why would we talk about managing something when referring to financial statements? It's important that an investor, ne? It's important that an investor is like, yo, I need to know who's managing this so that I am able, ne? So that I am able to put my money into these people. Because if the management is misbehaving or is acting in a manner that is not right and just, people are gonna be very skeptical, eh? People are gonna be like, I don't, I don't feel comfortable with giving you my money. For example, if you know that the owner or the management of the company you want to invest in is known for fraud and for scheming, would you be like, yeah, no, that's the place where I wanna put my money? Like, hey, scam. Yeah, I wanna be there. I'll be there. I'll be there. Like, do you think that's how people think, guys? Like, hey, scam. No, yeah. Good shot. Yo, my money's gonna be in safe hands here. No. People actually think the opposite. When they hear scam, they're like, oh, fine. I can't do this. I can't put my money. Hence why the stewardship of a company is so important, because it can determine what happens to the entity. Right? Good. Presentation of financial statements. We're gonna cover this more maybe in the next lesson, but you need to know your formats, guys, of how to present or how to prepare your statement of profit or loss, your statement of comprehensive income, and also your statement of changes in equity. Right? Those that did it in high school somewhat have an understanding or an idea, but those that didn't, don't worry, we'll cover it perhaps maybe tomorrow or whenever we have our next lesson. All right? But just know those are the three statements we're dealing with. What is a reporting period? Okay, another one. A reporting period. What do you guys think that is actually?
So I think it's basically a period where the owner of a financial statement can basically go to maybe the place where he placed the investment and basically file a complaint on a certain error found in that financial statement.
Not quite, not quite. But that's a good guess, but not quite. I see another hand. There's Batseba and Nevari. So let's go to Batseba, then Nevari.
Oh, I wanted to say that I think it's the time span in which a company reports its financial performance and position.
Okay. Yes, somewhere there. And then there's Nevari.
Okay, I thought maybe it's a reporting period is a specific time frame for which financial, business, or academic reports are prepared and analyzed.
Yeah, hey, Nevari, you quote there. I couldn't have said it better. That's absolutely correct, right? You guys can give him a round of applause. So, a reporting period, guys, is basically the time that which financial statements are prepared for. And with companies, they usually have their own reporting periods, right? And how long is an accounting period, guys? How long is a reporting period or how long is an accounting period? Usually, accounting. How long do we prepare financial statements for, guys? How many months or how many years? Think about this. Don't embarrass yourself now. We are together in this. We are together in this. 12 months. Exactly, Batsieva. We prepare financial statements for 12 months, guys, right? Because it's an accounting period. It's the whole year, right? So some companies start from January to December the 31st. Some it's February the 1st to January 31st of the next year. But whatever period it is, it's always going to be 12 months. So please do not be confused. Ne? Can everyone say yes with a thumbs up? An accounting period is 12 months, so please do not be confused. Unga ungabi dizzy. It's 12 months. And then we have what we call the going on consumption. When I get going on consumption, going concern assumption, or going the going on consumption. What do you guys think that is? So is a fiscal year also accounting period? Yeah. So with accounting, we usually rather call it a reporting period or accounting period, which is 12 months. With the fiscal thing, I think you're referring more maybe to like the state of the nation address and like the taxes and whatnot. But yeah, I think a fiscal year is also 12 months if I'm not mistaken. Yes, right. What do you guys think going consumption? The going concern assumption is?
So
Yes, there is.
I think the going concern assumption is the assumption that the business will continue to operate in the future.
Yes. So what's important in this definition, guys, is the going concern, right? Is the assumption that the business will continue to operate for a foreseeable future. You need to write that word for word, bar for bar. It is the assumption, right? It is the assumption that the organization or the entity will continue operating for a foreseeable future. So now, in an ideal world, that is what should happen when you guys are dating your partners, or if you happen to be dating, right? That is what should happen. It should be going on concern, right? It should be a going concern day. Mara, now with how things are, people are dating because it's Valentine's Day, and then after Valentine's Day, hi, my brother, I don't know you anymore, my sister. Hey, no, okay. That's not going concern. That's not a foreseeable future, right? That's temporary. That's being a lone player. You know, when you're being loaned, those that know soccer know what I'm talking about. You're alone. It's not a permanent contract. Don't get too excited. Right? Good shot. Good shot. Right? Then we have accrual basis of accounting. What is accrual basis of accounting? I see Batseba here has her hand.
It's a mistake, sorry.
Sorry, Batseba, absolutely not a problem. What do you guys think accrual basis of accounting is?
I think that accrual basis is a transaction that is recorded when it's received.
Okay, that's half a mark. Nice attempt. And if you're the only one that attempted it, then that's a nice attempt.
Sir.
Yes. How do you
So,
pronounce your name? Is it Mtreni?
no, my name is Temba, so you can just call me Temba.
Temba's one. Okay, hi. Temba.
Hey,
Hey,
accrual accounting.
yes.
It's basically like a method where like payments and like expenses are like credited and debited when like incurred, you see.
Oh, you're cooking. Yes, absolutely correct. So, in simple terms, right, guys, because he just confused it, but he actually hit it spot on, right? So, thank you, Temba, for that. When we talk about accrual basis of accounting, we are basically saying, in simple words, we record transactions when they happen, not necessarily when payment is made. Are you understanding, guys? We record transactions when they happen, not necessarily when payment is made. What do I mean by this? So, South African car dealerships, guys, you guys know cars, right? I own a Porsche myself. Nah, I'm joking. But it's nice to dream. So, with South African dealerships, South African dealerships, most of them use what we call a credit basis, because not everyone in South Africa can buy a car brand new cash concant. Right? You guys know, right? Some of your parents are loaning, right, those vehicles, and they're paying the bank on a month to month basis. Would you guys agree? Unless if Mara, ideally, normal people can't afford to buy their cars cash concant. So what do they then do? They take out a loan and then they pay the bank monthly installments, right? However, The car dealership that sold that car, immediately when that car leaves the dealership, they record that sale with the total value of the car is worth, not the money that they receive in their bank account. Are you guys following? That's why we can have a situation where we have what we call cash flow rich, but you're not liquid rich. You understand? So on paper, you are deemed to have so much money. Mara, in reality, cash flow, yona, ne? Liquidity, the actual money you have, you actually don't have it because it's still to come. You understand? So if car dealerships, guys, were not using this accrual basis of accounting, most of them would not be able to recognize profits because they don't have any profits. It's just on paper that, hey, I sold this car for $1 million, but they haven't received 1 million in their bank account, but they record that revenue as if they did. That is what we call accrual basis of accounting. We record transactions when they happen, not necessarily when payment is made. Are you guys following? He's cooking. I'm a chef. Me, guys, I'm chef. What you want? Gordon Ramsay. He's my twin. Like, I grew up with that nigga. Oh, he's not an but you know the vibe. YouTube is probably gonna demonetize this. You see what you guys make me do? But I'm joking, guys. It's all fun and games, right? But I'm cooking. Is everyone following? When it comes to accounting, this is home, guys. Where have you been all my accounting life? I'm here now. That's what matters. I'm here now. Ngikhona lana. Temba mina bafethu, temba mina. I'm here forever, guys. I'm not going anywhere. Even when I'm 50, I'll still talk about cash concant. Shanda pa. Maradona ge. Yes. So is everyone following, guys? Is there anyone with a question, perhaps? Who has a question? Who maybe wants to add something? So, sir, please give one more example of accrual account. So, accrual basis of accounting, we record transactions when they happen, not necessarily when payment is made. So, the example I gave was the dealership one. Another example, ne? Another example is let me think. So you sell a vehicle, you sell inventory, right? You sell inventory, but that inventory is sold on credit. You understand? Like you sold it to a receivable. A receivable is someone who is gonna pay you back, so they owe you money. It's a debtor. A debtor is an asset. So you sold inventory on credit. You sell stock. So Tembazwani, what do you sell? If you're to start a business, what business would you want to sell, my brother? Tembazwani, talk to me. What business would you want to engage in? Bitsley, Bafana, a serious business, Bafana, a serious one.
So I'd probably wanna sell like laptops maybe.
Laptops, fine. So let's say, Temba, you have laptops. That's your inventory. You sell laptops to a receivable on credit. The laptops are worth 50,000, but that guy is only gonna pay you in installments. When you record your revenue, you're gonna debit bank 50,000, right? No, not bank. You're gonna credit receivable 50,000, and then you're gonna credit revenue 50,000. Revenue increases on the credit side, right? And then assets increase on the debit side. Why are you saying revenue 50,000 even though you haven't received that 50,000? We are saying that, Ejo, it's most probably going to come, so we still record it as revenue. You understand? That is the accrual basis of accounting. We record transactions when they happen in real time, not necessarily when payment is made. Are you seeing, my brother? Are you seeing? Are you catching my drift? Tokyo drift. Are you seeing what I'm saying? Cooking, good. So there's Batsiba here who has a question. Is it a mistake? Because your hand has been up, Batsiba. Wantsiba mus.
I don't know how to submit my phone. I think ish.
Oh, it's just a mistake. Okay, not a problem. Don't worry, Batsiba. So that is another example of accrual basis of what? Accounting. So now we can move on, right? And when we prepare financial statement, guys, it all starts with a transaction or an event. How do I quickly summarize this? Because I want to wrap up now. A transaction is something that happens between two entities. So Temba sells me a laptop. Temba sells Dripanomics laptops so that Dripanomics can tutor students. That's a transaction. It happens between two people, two entities. An event is something that happens with one entity. For example, what? There was a fire that broke down at Dripanomics headquarters. Dripanomics property got damaged. There is no other entity involved there. It's just Dripanomics there. Are you guys following? That's the difference between a transaction and an event. Transaction, two entities are involved. An event, one entity is involved. Right? Good shot. And then they need to be recorded. This we'll cover. The definitions we already covered, right, guys? So there's no need for us to go through this, right? And then we have an example. So this is an example here, right? How many minutes do we have left? I think we should have enough minutes. 13 minutes. So I have a question for you guys, right? I'm gonna ask you guys to name the elements that are affected here. We're gonna need to define them, and then we're gonna also need to apply it. This is how it's gonna be tested in the first semester test, right? Which is gonna be written in March, which is next month. Yes, I know. I just arrived. I don't even know where I'm staying. Muni wari ni. We are here for you, right? I don't even know how to cook. Don't worry, I'm cooking on your behalf. Ne? I'm cooking on your behalf. But if you let me cook alone, guys, thing is I have a tendency of overcooking, so the food might burn. So you need to assist me while I'm cooking so that we don't burn the food. Because burn food means, hey, next year we are coming to cook again the same meal. And we don't want to cook the same meal. We can't cook the same meal again next year in terms of the same module. We can't. I cook once. And if once is enough, guys. Once, if done correctly, it's enough. But some people, they love this module and they love me as their tutor so much that they want to cook with me again next year. We can't accept that. You cannot love my teaching to that extent, right? You can't. Sigula, ama distinction soon. Oh, uzokula, boy. Uzokula. Parolage mala, mfana. I have diarrhea of distinctions. Yo, but yes. So I'm gonna give you guys a transaction, right? And then you guys will engage with me as to which element is it. Ne? Good shot. So let us go. On the 11th of September 2003, Dripanomics Tutorials received a bank loan of 12,500,000 from Cash Concant Bank. The contract was signed on the 9th of September. Apply the definition of an asset and a liability in the scenario mentioned above. So, one company is receiving an asset, the other one is receiving a liability. Who is receiving what here? Talk to me.
So can
So
you please
answer
go back
one.
to
Just answer one of each because there's two. So just answer one. Whoever wants to answer, just raise a hand so that I can come to you. So this is the scenario. On the 11th of September 2003, Dripanomics Tutorials received a bank loan of 12,500,000 from Cash Concant. Right? The contract was signed on the 9th. Who here is receiving an asset and who here is receiving a liability? Dripanomics receives both an asset and a liability. Mpofu, as much as you are correct, at this stage of the game, technically you are correct, but for the sake of this module or purpose, we must always look for the most correct answer. Do you understand? We always look for the most correct answer. So which do you think serves best? Because one is receiving an asset, the other one is receiving a liability. Think carefully, ne? Mpofu, I also want you to just retry it again before I give someone a chance. So choose one. Choose who's giving an asset and who's giving a liability, Mpofu. Just type the one you best believe is correct. Which one do you think is an asset or which one you think is a liability? And then I'll come to, I think it was Temba. I think Abigail, maybe. I'm not sure if it was Abigail. Dripanomics is getting an asset. Okay, so that's Lusanda. Asset, the other one. However, fine. I said the other one. Which one is this one, comrade? I said the other one. Are you DJ Khaled now? Another one. Another one. Yeah. Which one is this one? You must be specific, Mpofu. You can't just say the acid, the other one. Oh, fine. Right? Lusanda here says Dripanomics is getting an acid. So guys, this is where I need you guys to pay attention. But I want Mpofu to first respond. I need her to make a decision. In life, guys, you mustn't be caught in the middle. You must know where you lie. It's either you're on this side or the other side. Dripanomics, a liability. Dripanomics, the other company. Yeah? Emina, Mpofu, what are you saying? Mpofu, just unmute yourself because I can't read this. Dripanomics, a liability, yes. So you're saying Dripanomics is incurring a liability. Just say yes if that's what you say. Yes, and then the other one is receiving an asset. Is that what you're saying, Mpofu? Cash concurrent, you're basically saying is receiving an asset. Yes. So Mpofu is actually correct, ne? So Lusanda, stick with me. Don't run away. Don't run away, ne, guys? Dripanomics tutorials is receiving a liability because they have a present obligation to transfer economic resource as a result of the past event. What is the economic resource? It's the money that which they received, which is the 12,500,000, right? And then cash concurrent, the bank, is receiving an asset because Dripanomics is then going to be a receivable. What is the definition of an asset? The definition is a present economic resource controlled by the entity as a result of the past event. It's going to be a present economic resource because money is going to come in, which is going to do what? It's going to increase the cash flow of the business. It's going to increase the assets of the business and increase the equity of the business. So can you guys now tell why Dripanomics is receiving a liability while the other one is receiving an asset? So thank you so much, Mpofu. There you cooked. At first, maybe you were, hey, I was worried, but no. You made what you call a quick recovery. Yeah. Last man, quick recovery. Right? So now, we know the definitions, right? We now need to know how to apply it, right? So if I can find this, let me just try and look for it, ne? Because I don't want to open, because I think I already covered this. So I just want to look for a new one. But I'm not sure if I'm going to find it. Because you know when you're looking for something, the chances of you getting it, hey, it's crazy. You know when you're looking for something that you've lost, hey, and you look for it, you won't get it. But when you're not looking, that's when it pops up. That's the issue. So I hope that's not the case. Because that example is actually a good one. So let's just see here. So there's open other documents. When did I access the document? I should have accessed it soon though, like on the 30th. I don't want it to be too far. Nah, this is way too far. This is way too far. So let's have a look here. It should have been somewhere here. I just can't find it. It can't be the campaign. This serves as additional. It can't be. Okay, so I can't seem to find the document that which I was looking for, right? But let me just say this instead of typing it, let me just say it out loud, right? So how would we apply the definition of a liability to Dripanomics? I hope everyone's writing this down. Are you guys writing this down? I'm not sharing my screen now. I wanna say it. Ne? Give me a thumbs up if you're writing this. So we're gonna write Dripanomics tutorials liability because that's what they're incurring. You define what a liability is. And then how are you gonna go about it? You're gonna say that the present obligation, right, is to transfer the loan money back to cash concurrent bank, right? That is the obligation. The present obligation is to send back the money with interest, right? Let's go back to the definition. It's here, right? You're going to say that the present obligation of the entity is to transfer the bank loan money that which they receive from cash concurrent as a result of the past event. What is the past event? The past event would be the contract being signed on the 9th of September 2003, right? So that is how you can say it with the liability part. Let me come here. And then you're going to say, you also further state that it's a liability because there is a duty or responsibility that the entity has no practical ability to avoid. Why can't you avoid it? You can't avoid this because a contract has been signed and it is binding. It is legally binding. You have signed this contract, so you can't avoid it. Do you understand? Therefore, with that being said, that is why Dripanomics sees cash concurrent bank as a liability, because they have to transfer the economic resources as a result of the past events, and they technically have no practical way of avoiding it. Then you're gonna state, what does the liability do? Liability decreases our equity, right? It decreases our equity because money is gonna come out of our company because you need to pay back the bank loan with interest. Are you guys following, guys? Right? Fine. And then I would like to give you guys homework as to how you would apply the asset one. But actually, I think I should just give it to you guys, and maybe I should give you guys another homework. So, Dripanomics is a receivable to the bank cash concurrent, right? Why? Because they are expecting to derive money from that entity, right? From Dripanomics. Let's go to the definition. What does it say? It's a present economic resource controlled by the entity as a result of a past event. So, the economic resource there is the money that which was loaned to Dripanomics, right? Which the entity owned as a past event, right? The past event was, I don't know where the bank got their money, but it was theirs, right? They loaned it to the organization. An economic resource is a right that has the potential to produce economic benefits. The economic benefits in this context is the money coming back with interest, right? The bank is going to charge Dripanomics interest. So it's an asset because their assets are increasing. The equity is going to increase. And the money that is being brought by Dripanomics will help the business expand the organization. You understand, guys? It'll make the organization have more money and be able to expand if needed. Right? And that is where I would like us to end our lesson, guys. We have under a minute left, so I just wanted to use this opportunity to thank you so much for joining, and I hope that you enjoyed the lesson brought to you by Dripanomics Tutorials. I hope you're in our WhatsApp groups. I hope you're subscribed to our YouTube channels, because we are still here to cook for the whole year. So please just type in the group, guys, how the lesson was, how you enjoyed it, and speak to other people so that they are also not deprived of information. Thank you so much, guys. Peace and love. Bye-bye.